Good morning, students. Welcome you all in live coaching classes organized by Board of Studies of ICAI. So, students, today is the first class and first day of Paper 1 Financial Reporting, which is your first paper of CA Final. Let me introduce myself. My name is Alok Garg. By the profession, I'm a Chartered Accountant and Company Secretary. I'm also Diploma IFRS from ACCA London and Certified Ind AS from ICAI. I'm also an honorary doctorate from American East Coast University of New York, USA. And I have a total experience of more than 15 years in the domain of financial reporting, consolidation, and accounting. And right now, I'm heading a financial reporting vertical with a large listed company. So, students, in India, we have two set of standards, right? Right now, we have accounting standard as well as we have Indian accounting standards, right? So, during the journey of your CA, you have already completed CA Inter or IPCC, right? In CA Inter or IPCC, you must have read accounting standard, which is known as AS, which is known as old GAAP. So during your Ind AS journey in CA final, probably the faculties will call old GAAP, Indian GAAP. So when they are calling old GAAP or Indian GAAP, they are trying to say, they are trying to touch upon accounting standards. So accounting standards are the older version of accounting standards. These are the older version of reporting standard which was applicable to India. So today we are going to discuss about introduction to Ind AS, roadmap and applicability to various entities, and division 2 to schedule 3, right? So let's discuss one by one. So students, so far we have read or we have gone through with the accounting standard. What are the accounting standard? So we know accounting standard are AS1 to AS29, right? AS1 starts with disclosure of accounting policies and AS29 which ends with provisions, contingent liability and contingent asset. So we have read this accounting standard in our CA Inter or IPCC, right? These are the older version of accounting and reporting standards in India. Is it clear? Students, then we have Ind AS. What is Ind AS? Ind AS are Indian accounting standards. Indian accounting standards. In short form, we are calling it as a Ind AS. IND AS, AS capital. These Indian accounting standards are applicable in CA final, right? So the paper 1 is financial reporting paper, but if I talk about paper 1, it includes 95%. The syllabus includes Indian accounting standards. Financial reporting is nothing. It's Indian accounting standards. You have to read Ind AS for cracking your financial reporting paper, right? So Indian accounting standards are the part of your CA final curriculum. Okay. So AS we have read in CA Inter or IPCC. Ind AS is applicable in CA final, which is your paper 1 financial reporting paper, FR paper. 95% paper is nothing. It's a Indian accounting standards. Is it clear? So friends, in India, we have two set of standards, AS, which is known as old GAAP, previous GAAP or Indian GAAP, right? Ind AS, it's a new set of standard, which is applicable in CA final, which is converged version of IFRS applicable to India. Converged version of IFRS applicable to India. It means when we are talking about AS and Ind AS, we are talking about Indian. We are talking about Indian accounting and reporting standards. Now, what is a global standard? IFRS. From where this Ind AS has been derived? It is derived from IFRS. What is meant by IFRS? International Financial Reporting Standards. Students, if you have elected GFRS paper, which is paper 6, which is elective paper, if you have elected GFRS paper, in that case IFRS will be applicable, right? So it is elective paper. IFRS is there in elective paper of GFRS, right? My recommendation is the students who is in love with accounting, who loves accounting, and they are very good in accounting standards. They are very good in for them accounting paper is seems interesting. So I would recommend them to elect a GFRS paper. Why? Because when you read Ind AS, your 99.5% of GFRS paper will also be covered, because Ind AS is nothing. It's a Indianized version of IFRS applicable to India. It's a converged version of IFRS applicable to India, right? So Ind AS is 99.5% cut copy paste of IFRS, I would say. Clear? So IFRS is global and AS and Ind AS is Indian, right? So I hope as far as standards are concerned, you are well aware, you have well understood about the structure of AS, Ind AS and IFRS, right? So in this FR paper, we will be talking about Indian accounting standards. Clear? And today, being the first day of the session, we will be talking about what is Ind AS, Introduction to Indian Accounting Standard, right? How to read Ind AS. We'll talk about how to read Ind AS. So today, we will be talking about Introduction to Ind AS. Since we have two set of standards in India, accounting standard and Ind AS. So Ind AS are applicable to which set of entities? We will be talking about applicability, right? We understand about Ind AS, then we will understand about applicability, then we will understand about the format of financial statement as well. So we will be talking about Schedule 3, format of financial statement, which is Schedule 3, right? Is it clear? And when we are talking about Ind AS, we will be talking about from where this Ind AS has been derived. Ind AS has been derived from IFRS, right? So we will be talking about International Financial Reporting Standard as well. I hope the context is set for everyone, right? Right. I can see a lot of students have joined: Namrata, Mansha, Sriram, Viraj, Nidhi. So a lot of students have joined. So good morning, students, once again. So let's start the journey. Friends, we discussed about AS, Ind AS, and IFRS. So friends, now let me take you more about this area. Ind AS, Indian Accounting Standard. Ind AS were notified by Ministry of Corporate Affairs on 16 February 2015, right? So first time Ind AS become the highlights of Indian newspaper on 16 February 2015, right? And these Ind AS are derived from IFRS. These Ind AS are derived from IFRS, okay? So now we need to understand what is IFRS, right? And why IFRS is important, right? Why, in spite of having accounting standard, why Ind AS has been introduced in India on 16 February 2015. We need to understand that, right? To understand that, let's discuss this case study. This gentleman is Mike from France, right? And this gentleman is me, PP from Hong Kong. The third one is Morris from Kenya. The fourth one is Mukono from Japan, Max from Australia, and Mr. Kejriwal from India. These six gentlemen went to London to attend a meeting. These six gentlemen went to London to attend a meeting. These six gentlemen are from different six geographies, are from six different countries, right? So Mike from France only knows French language. Me GP from Hong Kong only knows Chinese language. Morris from Kenya knows Mandarin. Muko Ono from Japan knows Japanese language, right? He knows Japanese language. Max from Australia knows English. And Mr. Kejriwal from India knows Hindi, right? And these six gentlemen are sitting in a room discussing something. Do you think that this meeting will be fruitful? Do you think that meeting will be conclusive? Everyone is speaking in their own regional language, and everyone is able to read, write, and understand their own regional language. Yeah, Rahul is saying no, sir, this meeting will not be fruitful. You're right, Rahul. Why? Because no one will be able to understand each other's language. No one will be able to discuss with each other. No one will be able to argue, discuss, understand each other's opinion, each other's views. So this meeting will not be fruitful. And what is the problem here? What is the barrier here? The barrier is language. Language is the problem here. Language is the problem here. Language, right? Okay. Now, friends, let's understand and let's elaborate this story to understand about the global standard. So we all understood that language is the problem here. So this meeting will not be fruitful because each one of them will not be able to understand others' views, right? Okay. So what is the solution here? And Mr. K. Prashant has given the solution. He said, no common language to interact. If the common language would be there, probably the life becomes simple. So the solution is common language, right? For example, English. English is internationally accepted common language, right? If everyone knows English, probably their life will become simple. Now, friends, do you know how many countries are there in the world? There are 200 countries. There are 200 legal countries in the world. And do you know how many reporting gaps are there in the world? When I'm talking about reporting gaps, I'm talking about generally accepted accounting principles. There are more than 50 reporting gaps in the world. More than 50 reporting gaps are there in the world, right? Means there are more than 50 ways of accounting and reporting in the world. For example, in India, we have Indian GAAP, right? The old accounting standard, which is Indian GAAP, right? So accounting standard is nothing. It's an Indian GAAP. The Indian listed companies were reporting under Indian GAAP, which is accounting standard. In US, it is US GAAP. In Hong Kong, it is Hong Kong GAAP, Chinese GAAP, UK GAAP, French GAAP, Canadian GAAP, Australian GAAP, right? Bhutanese GAAP, right? So friends, almost most of the countries were having their own GAAP, right? Having their own GAAP. So now, if Mike has to invest in the company of Mr. Max, so whether Mike will be able to understand the financial statement prepared in Australia? Answer is no. Why? Because the Australian financial statement has been prepared as per Australian GAAP, and Mike knows French GAAP, right? MeGP has to invest in the company of Mr. Kejriwal. So before investing, the investor has to see the financial statement, and MeGP knows Hong Kong GAAP, but the financial statement of Mr. Kejriwal's company has been prepared under Indian GAAP, right? Has been prepared under Indian GAAP. This Morris wants to invest in the company of Mr. Muko Ono. So Mr. Muko Ono's financial statement have been prepared under Japanese GAAP, and Morris knows African GAAP or IFRS, let's say, right? So friends, in this entire world, if a person or an entity wants to invest in a different countries, in a different country, so that company or that entity or that person will not be able to understand the financial statement of other country. Why? Why? What is the problem? Reporting language is the problem. Because as we speak, as we discussed couple of minutes back, that there are more than 50 gaps in the world, more than 50 gaps, right? Because most of the countries has its own gap, has its own accounting and reporting system. So now what is the solution here? The solution is to have a commonly accepted reporting language, right? Like in the earlier case, language was the problem. In this case, reporting language was the problem. Reporting language is the problem. And what is the solution? The solution is commonly accepted reporting language. Commonly accepted reporting language, right? So friends, now the question arises, what could be the commonly accepted reporting language? What could be the commonly accepted reporting language? And I'll give you some name, right? UK GAAP, French GAAP, Australian gap, Canadian gap, Indian gap, US gap, Chinese gap, Portuguese gap, African gap, Canadian gap, Bhutanese gap, Hong Kong gap. In all these words, in all these names which I have taken, what is the common here? What is the common word in all these names? What is the common word? What is the common word in all these names? Yes, Nishant, the common word is gap. Okay. Radhika is also saying, sir, the common word is gap. All agree with this? The common word is gap. Sriram is saying, Sriram, Prashant, Divya, Rakesha, Harita, Uma, Nidhi, everyone is saying gap. Friends, you are CA final students, right? And you are learning accounting and reporting paper. So go by the substance, not by the form. The common word is not gap. The common word is prefix. The prefix is common. What is the prefix? Prefix is name of the country. In every name, the name of the country is there. Am I right? Mansa is saying country name. Very good, Mansa. Country name. UK gap, US gap, Portuguese gap, Canadian gap, Australian gap, African gap, Indian gap, Chinese gap, Hong Kong gap, Malaysian gap. So in all these names, prefix is common, which is the name of the country. Now the question arises, if I have to select, for example, if India was given to implement Chinese accounting standard, Chinese gap, whether India would like to adopt Chinese gap, answer is no. If someone tell Australia to adopt Hong Kong gap, whether Australia would like to adopt Hong Kong gap, answer is no. So friends, all these gaps are entity specific gaps. All these gaps are entity specific gaps. In that case, what could be the commonly accepted international language? IFRS. What is the full form of IFRS? What is the full form of IFRS? You know what is the full form of IFRS? Intention for reading standard. As per Alok Garg, full form of IFRS is intention for reading standard. But this is Alok Garg definition. The full form of IFRS is International Financial Reporting Standards. Do you find the name of any country in the full form of IFRS? Do you find the name of any country? The name of any geography? Do you find any name of country or geography in IFRS? Answer is no. International Financial Reporting Standard. Janvi, it is not International Financial Reporting Framework. It is International Financial Reporting Standards. Right? So friends, it is international. It is not name of any country. It is international. That is why, as of now, out of 200 countries, more than 160 countries are using IFRS. I have used word using IFRS. More than 160 countries are using IFRS. Right? Like in India, all Indian listed companies are using IFRS. How it is using? It is using the converged version of IFRS, which is Indian accounting standard. Singapore is using IFRS, right? They are using the converged version of IFRS applicable to Singapore, which is known as SGFRS, Singapore Financial Reporting Standard. Malaysia is using the converged version of IFRS, and they are using MFRS, Malaysian Financial Reporting Standard. Hong Kong is using the converged version of IFRS in their country, which is known as HKFRS, Hong Kong Financial Reporting Standard. Right? Is it clear? Is that clear to everyone? That is why, friends, more than 160 countries are using IFRS, right? Europe has adopted IFRS. So we will discuss how to use IFRS, right? Friends, you know what is the GDP size of the entire world? The GDP size of the entire world is 95 trillion US dollar. And out of 95 trillion US dollar, more than 50 trillion US dollar is reporting into IFRS. more than 50 trillion US dollar is reporting into IFRS. Is it clear? Right? So that is why what could be the commonly accepted reporting language? The commonly accepted reporting language is that language which is not a country specific, which is not a geography specific, right? And that is why, friends, IFRS is getting a lot of prominence because it's an international financial reporting standard. It's an international language. Is that clear? Is that clear, friends? I hope it is clear to all of you. Yeah. I hope it is clear to all of you, friends. Yeah. Just a minute, my screen. I'm resharing my screen. Yes. So, friends, we understood about why we have introduced Indian accounting standard. Indian accounting standard are the converged version of IFRS applicable to India. We have introduced Ind AS to become more global, right? So that our financial statement, our accounting and reporting system should be substantially aligned with the global accounting and reporting system, right? Is that clear? And friends, that is why, as I have told you, Ind AS is 99.5% cut copy paste of IFRS. Someone has asked me, sir, what is the difference between GFRS and IFRS? Friends, GFRS is the name of the paper, Global Financial Reporting Standard. It's a name of the paper, right? There is nothing called GFRS. It's the name of the paper. So in GFRS paper, what will be asked? IFRS will be asked, right? And what is IFRS? So IFRS is a global standard. If you have understood Ind AS, then 99.5% syllabus has already been covered for GFRS paper, right? Is that clear? So we will discuss about the difference between IFRS and Ind AS as well. So now let's understand how this IFRS has evolved when this IFRS was born, right? Friends, in 1973, in 1973, there was a committee in 1973, year 1973. There was a committee IASC, IASC, International Accounting Standard Committee, Standard Committee. So friends, after Second World War, after Second World War, when the economy started evolving, right? The economy started transacting with each other. And that time, the accounting and reporting system was not that strong in every country, right? Like in Africa, there was no accounting and reporting standard. In Bhutan, there was no accounting and reporting standard, right? So if we, so apart from US, apart from Europe, some countries of Europe, apart from US, right? Australia. So in the developed nation, apart from developed nation, the other countries were not having the good accounting and reporting framework in their country. With this, in 1973, some member nations, including America, which is USA, right? Including England and Wales, including your UK, right? Europe, and some other member nations have decided to issue, have decided to issue or have decided to draft some international accounting standard, right? So that if any country wants to use this standard, they can use this standard, right? And they wanted to draft such kind of standard and such kind of syllabus which is not restricted to a country or a geography, right? Which can be spread all across the world. If any country wants to use those standards, they can use those standards, right? With this intent, from 1973, they have issued International Accounting Standard, IAS. They have issued International Accounting Standard, International Accounting Standard. And in 1973 to 2001, they have issued 41 international accounting standard. They have issued 41 international accounting standard, right? Friends, let me talk more about International Accounting Standard. This International Accounting Standard Committee was situated in London, right? The headquarter, the head office of this committee, or IASB, International Accounting Standard Board, is in London. Right? And the London's economy is, the UK economy is not a hyperinflationary economy, right? You understand? Inflation, you understand? Like Indian economy is inflationary economy, right? So what is meant by hyperinflation? Hyperinflation means where the inflation crosses more than 100% or approaches to 100%. So the London's economy is not a hyperinflationary economy, but this International Accounting Standard Committee has issued a standard, IAS 29. We will read Ind AS 29. So this committee has issued a standard, IAS 29, which talks about financial reporting in hyperinflationary economies like Zimbabwe, Venezuela, Ghana. These countries have hyperinflationary economies. So sitting in London, this committee, this board is drafting the standard which is suitable for hyperinflationary economies, right? The UK's economy is not an agriculture based economy. But sitting in London, they have issued a standard IAS 41. And this IAS 41 talks about agriculture accounting and reporting. So friends, in India, our Indian economy is agriculture based economy, but we don't have any agriculture related standard in our accounting standard. We don't have. Our economy is an inflation based economy, not a hyperinflationary economy. Our economy is inflationary economy, right? And we have not issued any standard on financial reporting in hyperinflationary economies. Why? Because it is not required to us, right? So friends, the agenda, the motive was to issue the international accounting standards, so that these standards are so flexible, these standards are so complete, that if any entity, any country wants to use this standard, they can use this standard. For example, African economy is an agriculture based economy, right? So they are using this IAS 41. Have you understood this thing? So I have given you comparison also. In accounting standard, we don't have hyperinflationary standard, we don't have agriculture standard, but this International Accounting Standard Committee has issued the standard on these topics, these subject as well, right? So friends, from 1973 to 2001, this International Accounting Standard Committee formed by some member nations have issued 41 international accounting standard, right? Clear? Friends, in 2001, what happened? So it's been 3 decades, it's been 28 years when this committee has issued 41 international accounting standard. So in 2001, the member nations have decided to restructure the structure of this entire committee, to restructure the structure of international accounting standard. Why? Because these standards become 30 years old, right? This committee become 30 years old committee in 2001. And in the 30 years, in 3 decades, the complexity of the transactions between the countries has evolved, right? The volume of the transaction between the countries has increased manyfold. The complexities has increased manyfold, right? There were billions and trillions of transactions were happening between the countries, right? So this board has decided, the member nations have decided to restructure the entire structure of international accounting standard. And since the size of the economy was getting bigger, the transaction was getting more and more, right? The transactions was getting complex, right? Lot of scams were also started happening. And with this, the member nations the founding members have decided to restructure this entire structure, and in 2001 they have demised, they have deleted International Accounting Standard Committee, and they have formed a new board known as International Accounting Standard Board, IASB, International Accounting Standard Board, IASB, International Accounting Standard Board. So as of now, this board prevails, International Accounting Standard Board. And what was the objective of this board? The objective of this board was to review old International Accounting Standard, review old IAS, International Accounting Standard. And wherever major changes are there, right? Delete that IAS and issue new standard in the name of IFRS, in the title of IFRS. So friends, IFRS got birth in 2001, right? IFRS got birth in 2001. And wherever no major changes are there, then continue with old IAS, or if small changes are there, just amend that old International Accounting Standard and issue the revised International Accounting Standard. So friends, in 2001, International Accounting Standard Board took over on International Accounting Standard Committee, and from 2001 they have decided to issue the standard in the name and title of IFRS, right? And if you will compare the name of International Accounting Standard and International Financial Reporting Standard, you will find that International Accounting Standard seems more like an accounting standard. But when you talk about International Financial Reporting Standard, it talks more about accounting and reporting as well. Right? Accounting and reporting as well. Is that clear to all of you? So friends, as of now, in place of 41 IAS, there are 24 IAS and 16 IFRS There are total 40 international standards, 40 global standards. Is that clear? 24 International Accounting Standard and 16 IFRS. So if someone will ask you how many IFRS are there, so you should not talk about only 16 IFRS. You should say there are 24 IAS and 16 IFRS, right? There are total 40 standards. 40 standards are there. Is that clear? Is that clear to all of you? Yeah. Is that clear? Very good. So friends, internet and these all IAS and IFRS are property of International Accounting Standard Board. The copyright is International Accounting Standard Board is having copyright on IAS and IFRS, right? Sir, in place of 41 IAS, why only 40 standards? So friends, there were two International Accounting Standard, IAS 11 and IAS 18. These two standards were talking about revenue. Now, in 2018, these two IAS standard got deleted and a new IFRS standard has been issued, IFRS 15. So that is why instead of 41 IAS, there are 24 plus 16 standard. It means total 40 standards are there. Slowly and gradually, International Accounting Standard Board is deleting the International Accounting Standard and issuing the new standard in the name of IFRS, right? So whenever the major amendments are happening, they are issuing new IFRS and deleting old International Accounting Standard, right? But as of now, there are 24 IAS and 16 IFRS. Total 40 standards are there. Is that clear? Okay. Friends, so we talk about global standards. In the global standard, there were some interpretation committee also, right? What is meant by interpretation committee? Like in India, we do have accounting standard. And in India, in the older days, there were accounting standard interpretations also, ASI, right? What is the role of ASI? What is the role of interpretation committee? The role of interpretation committee was to issue interpretations in the standard. For example, do you know AS 16? Are you aware about accounting standard 16? Are you aware about accounting standard 16? It's a borrowing cost standard, right? And when this borrowing cost standard came, so borrowing cost is required to be capitalized on qualifying asset. And what is the definition of qualifying asset? So qualifying asset are those assets which take substantial period of time for getting ready for use or sale. Now, when this AS16 was came, the substantial period of time was not defined, right? So hence there was ASI 1. ASI 1 was introduced where the clarification has been given that substantial period of time means more than 12 months, right? Because changing a standard is a long process. That is why the interpretation committees are there which issued clarification with respect to the standards. Is that clear? Is that clear? Yeah. Okay. Friends, likewise, in 1973, when International Accounting Standard Committee was there was a sister concern of IASC known as SIC, Standing Interpretation Committee. And what was the objective of Standing Interpretation Committee? The objective was to issue interpretations. The objective was to issue interpretations, clarification with respect to standards. So friends, when this IASB took over on IASC, this Standing Interpretation Committee got demised and the new committee was introduced, which is known as IFRIC Committee, International Financial Reporting Interpretation Committee, right? So friends, this IFRIC committee has reviewed all the SIC interpretation, issued by SIC committee. Wherever they found that major amendments are there, they have deleted SIC interpretation and issues new interpretation in the name of IFRIC interpretation. So friends, as of now, there are 15 IFRIC interpretations and 5 SIC interpretations. So what is the total curriculum of IFRS? 24 IAS, 16 IFRS, 15 IFRIC interpretation and 5 SIC interpretation. So this 60, total 60 is the curriculum of IFRS, right? So friends, we have talked about, and why we have talked about history of IFRS. It is important to understand the history of IFRS so that we will be able to understand how we have drafted, how we have finalized our Indian accounting standards, right? I hope it is clear to all of you so far. Yeah, very good. And as of now, we have total 24 IAS, 16 IFRS, 15 IFRIC interpretation, 5 SIC interpretations, right? Is that clear? Very good. Friends, I have used the word that 160 countries are using IFRS. So now how to use IFRS? The point is how to use IFRS. There are two ways of using IFRS. One is adoption and one is convergence. What is meant by adoption? What is meant by adoption? Adoption means like adopting a child. Adoption means taking others' baby as your baby. As simple as that. As it is. Adoption means as it is. As it is, right? As it is. Like Europe has adopted IFRS, right? Europe has adopted IFRS in 2005. When you read European balance sheet, for example, when you read HSBC Holding PLC annual report, you know what is written there? When you download the annual report of HSBC Holding PLC, and when you will look at the basis of preparation paragraph, you will find that it is written that the financial statement of HSBC Holding PLC has been prepared as per International Financial Reporting Standard as issued by International Accounting Standard Board and as adopted by European Union and European Financial Reporting Advisory Group. So in European financial statement, you will find that in basis of preparation para, they are writing that we have prepared our financial statement as per IFRS. Which IFRS? The IFRS which is issued by IASB. IFRS includes IAS. Okay. The IFRS which is issued by IASB but adopted by European Union and European Financial Reporting Advisory Group. Right? Is that clear? Is that clear? So adoption means as it is, like New Zealand has adopted IFRS. Pakistan has adopted IFRS. Middle East has adopted IFRS. In Dubai, in Abu Dhabi, you will find that they are preparing their financial statement as per IFRS, right? Is that clear? Now, the second, the most prominent mode, the most prominent route is convergence. What is meant by convergence? Convergence means doing some changes in IFRS, means modified IFRS, right? For example, these IFRS have been developed by IASB, London. In India, our economy is a developing economy, right? So what we have done, we have called so our accounting standard board of ICI has made a phone call to IASB London and they have asked for the word files of IFRS. Why word files? So that they can do some changes. The moment we are doing some changes in IFRS standards, wherever I am using word IFRS means IFRS includes IAS, right? So the moment we are using the moment we are doing some changes in IFRS, we cannot call it as a IFRS because IFRS is the copyright of IASB. So that is why we have called it as a Indian accounting standard, Ind AS. We have called it as a Ind AS. Like Singapore has converged IFRS. That is why they are not calling it as a IFRS. They are calling it as a SGFRS, Singapore Financial Reporting Standard. Malaysia has converged IFRS. That is why they are calling it as a Malaysian Financial Reporting Standard. Hong Kong has a converged IFRS. That is why they are calling it as a HKFRS, Hong Kong Financial Reporting Standard. Bhutan has a converged IFRS. That is why they're calling it as a BFRS, Bhutan Financial Reporting Standard. Is that clear to all of you guys? Is that clear to all of you? Yeah. So friend, when we started thinking about taking IFRS in India, so developing a standard and implementing a standard is not an easy task, right? You have to involve a lot of regulators in that. So we have asked comments from RBI, Reserve Bank of India, IRDA, Insurance Regulatory and Development Authority, SEBI, industry associations, ICSI, ICWAI, right? So we have asked recommendation from various universities, various regulators, various institutes, various authorities, right? And we found that we cannot implement IFRS standard as it is, right? So then what we have done some changes, and I'm not talking about substantial changes. Our Ind AS are 99.5% cut copy of IFRS. If I'll ask you, even if I'll ask with a rank holder who has scored 100 marks in financial reporting paper, even if I'll ask him, do you know 100% of Ind AS? I'm sure that he will say no. And I'm talking about 99.5%. Ind AS are 99.5% cut copy paste of IFRS. So we have done some minimal changes. We have done some limited changes, which was required as per our country, as per our economy, as per in accordance with our industries, our companies, right? So friends, whatever changes we have done, we have classified these changes into three parts, right? Carve out. What is meant by carve out? What is meant by carve out? Carve out means doing some changes in IFRS which is resulting into what? Resulting into what? Different treatment. Basically, carve out means we have done different treatment in Ind AS in comparison to IFRS, right? Different treatment in Ind AS in comparison to IFRS. Friends, let me take you through my Word Excel file, and please let me know if the Excel file is visible. The first change which we have done is classified as carve out. Carve out means applying different treatment in Ind AS in comparison to IFRS, right? So we have deviated from the compliance, from the requirement of IFRS, and we have adopted a different treatment in India, right? I hope this Excel file is visible to all of you. So friends, we have around 8 to 9 carve out total. 8 to 9 total carve out we have, right? So I am talking the first carve out. I'm not talking all the carve out because the faculties will teach you those carve outs, right, in their respective standard and respective sessions. So the first carve out, in let's discuss about the first carve out. In IFRS, for example, the reporting date is 31st March 2022. And the company has taken a long loan on 15 November 2021 for a period of 5 years. This loan is repayable after a period of 5 years, right? This loan is repayable after a period of 5 years. So friends, on 31st March 22, how much period is going to be there? How much period is left? So it's 4 years and 7 months approximate 4 years, 7 months. So what is the classification in IFRS for this kind of loan? Of course, non-current classification will be there. In Ind AS, this loan will be classified as non-current. In accounting standard, this loan will be classified as non-current, right? Because on the reporting date, still this loan has a repayment maturity or repayment obligation after 4 years and 7 months, right? On the reporting date, the company has made a violation of loan covenant, and due to this, the loan become repayable on demand. So friends, what is meant by loan covenants? For example, when the company has taken a loan, the banker has said that you have to use this loan in a particular for a particular purpose. You have to submit the regular financial statement with us. You have to submit the stock statement with us. You have to maintain a minimum current ratio, minimum long-term solvency ratio of this, right? So whatever condition of the loan was there, the company has made a violation, and due to this violation, the loan becomes repayable on demand. So friends, due to this violation, tell me, what should be the classification of loan, this long-term loan in IFRS in India? So of course, current. In IFRS, it will be classified as current. In Ind AS also, it will be classified as current, right? Friends, we are discussing the classification of long-term loan. So we understood that this is a situation, and we have classified this loan as a non-current in Ind AS and IFRS. Due to this loan become repayable on demand, we have classified this loan as a current, right? Is that clear? I hope it is clear to all of you. Even though in accounting standard, we should have classified this loan as a current. Very good, Namrata. Now I am giving you more facts. The financials are going to be approved or adopted in the board meeting scheduled on 15th May 2022, right? In the month of April, so these financial statements are going to be approved or adopted in the board meeting scheduled on 15th May 22. And you are aware that for a financial year, whenever the financial statements are prepared, it got adopted in the board meeting, and it got approved in the board meeting. When it got approved in the board meeting, then only this financial statement becomes public, right? Is that clear? So in the month of April, it means after reporting date, but before approval of the financial statement, the management talked with the bank, and bank agreed to waive the violation and will not demand the payment immediately and will go by the old terms. So friends, after the reporting date, but before approval of the financial statement, the company has talked to the bank, and the bank has agreed that, okay, we will not demand the payment and we will go by the old terms. The bank has agreed to waive the violation, waive the non-compliance. So friends, according to you, what should be the classification? Friends, on the reporting date, this liability was a non-current liability. But due to the default on the reporting date, this liability will become the current liability. But before approval of the financial statement, means before financial statement goes public, this liability has already been settled. I mean to say, the issue has been settled and this liability is no more a current liability. Right? For example, when next year you will prepare a financial statement, still 3 years and 7 months are yet to pass. So in the next year, you will show this liability as a non-current liability. So in your view, what should be the classification of this liability? Whether this event should be considered as an adjusting event or non-adjusting event? What is your view? Let's wait for the view. Are you able to hear me properly? Amrita, there is no part. The bank has agreed that okay, we will demand the entire payment as per the old terms, and the entire payment has to be made after 4 years 7 months. Sri Ram is saying after the reporting date, but before approval of financial statement, means the loan to be accounted as per the old terms only, to be classified as non-current liability. Very good. Ravinder is also saying adjusting event. Namrata, Vani, Kamaljit, all are saying, sorry, Kamaljit is saying non-adjusting, but Sri Ram, Ravinder, Namrata and Vani are saying adjusting event. Very good. Friends, in IFRS, this liability was considered, this event is considered as a non-adjusting event, because IFRS is saying that okay, you have made a default, we want you to not to consider this waiver and you have to show this liability as a current liability, right? But in India, we haven't agreed with this and we said no, we'll show this liability we will consider this event as an adjusting event and we will restate this liability as a non-current liability. Why? Because we told that we are a developing country and we have a very sensitive relationship between the customer and the banker, because we are a developing country, right? And nowadays, if you have seen that you got so many calls to open a bank account, to invest in FD, right? And in India, we have so many small conditions, like you have to submit the stock statement, you have to submit the creditor and debtor statement, you have to submit the financial statement, you have to maintain the ratio, right? So if due to the default of such things, I'm not talking about if the default will be there, of course, and the default will result into, if the default will result into the non-compliance, right? And it will result into the immediate payment of the loan. Of course, it has to be classified as current, but if the default has made good before approval of the financial statement, it has to be treated as adjusting event. And according to me, it is logical also, right, friends? Is that clear? Is that clear? It should be adjusting event, right? Yes, Ravinder, you're right. We will adjust in Ind AS, but IFRS say non-adjust. Is that clear? Friends, this carve out is given in Ind AS 1, which is presentation of financial statement, and Ind AS 10, which is events after reporting date. Ind AS 1 and Ind AS 10. Is that clear? Friends, let me again go back to my PowerPoint presentation. We have discussed carve out. Carve out means to have a different treatment in Indian accounting standard in comparison to IFRS. And we have seen that in case of a long-term loan, if there was a default on the reporting date, but if the default has made good before approval of the financial statement, in IFRS, it was non-adjusting event. In Ind AS, we have taken as an adjusting event in Ind AS 1 and Ind AS 10. Right? How many carve out are there, sir? There are 8 to 9 carve out in different standards, right? So every faculty will teach you the carve out with the respective chapter, respective standard. Is that clear? What is meant by carve in? The second change. The first change we have classified as carve out. What is meant by carve in? Carve in means putting additional guidance, which was not there in IFRS, but we have incorporated additional guidance in Ind AS, right? What is that? So again, I'm going back to my Excel file. And friends, there is only one Carvin. Only one Carvin is there. And this Carvin we have taken in the acquisition, in the merger and acquisition standard. So friends, there is a standard in IFRS known as IFRS 3, which is a business combination. This merger and acquisition is known as a business combination in our IFRS scenario, right? In AS, we have AS 14, accounting for amalgamation, right? But in Ind AS and IFRS, it is business combination. Likewise, we have Ind AS 103, business combination. Friends, IFRS says that whenever a company is acquiring another company, the net assets will always be carried at fair value, right? There is no pooling of interest method in IFRS, right? But in India, we were having pooling of interest method as well as we were having fair value method. We were having two options. In IFRS, there was no pooling of interest method. And if a company is acquiring another company, the net asset has to be measured at fair value. The consideration has to be measured at fair value. So what we have done, and we know that Indian CA are very smart. So we have put an additional guidance in India. We have put an additional guidance in India. And you know what was the additional guidance? We have said that in case of common control acquisition, where a company is acquired by a group company, right? So there is a big group, like Reliance is having a very large group. Bharti Group is a large group, right? Adani Group is a large group. And normally in these companies, a lot of restructuring are happening. One company is acquired by another company, then another company is demerged to another company, right? So there are a lot of group restructuring. So friends, we have inserted a guidance that in case of common control transaction, we will use pooling of interest method. What is meant by common control acquisition? Common control acquisition means, for example, there is a company A Limited, right? A Limited is having a subsidiary, B Limited, and another subsidiary, C Limited, right? C Limited is having another subsidiary, D Limited. So friends, C is the father of D, and A is the father of B and C, and A is the grandfather of D. So what is meant by common control transaction? Common control transaction means father has been changed, but the grandfather has not been changed. What does it mean, sir? For example, D is acquired by B. Earlier, D was the subsidiary of C, but now D is acquired by B. So D becomes subsidiary of B. So now this B, who was the uncle of D, becomes father of D. Am I right? Am I right? So in this scenario, the father has been changed. Earlier, the father was C. Now the father is B. But grandfather has not been changed. So what is meant by common control acquisition? Common control transaction means a transaction where father has been changed, but the grandfather has not been changed. I am just giving you a trick to remember, right? But what is the technical meaning of common control transaction? Common control transaction means the transaction where the acquisition, the merger and acquisition where the controlling entity may be changed, but the ultimate controlling entity will not change. So who is the ultimate controlling entity here? A Limited is the ultimate controlling entity here. So even when D was the subsidiary of C, the ultimate controlling entity was A Limited. When D become the subsidiary of B, still the ultimate controlling entity is A Limited. So friends, this is known as a common control transaction. And we have included an additional guidance that, okay, for all the business acquisitions, for all the merger and acquisition, we will follow fair value method. But in case of a common control transaction, we will not follow fair value method. We will follow book value method, pooling of interest method. Why? Because if this merger and acquisition is happening and the ultimate controlling entity is same, it means there could be a nexus in the transaction, because these are the related party transactions. And hence, just to inflate the balance sheet, right, the company should not have increased the value of their assets, right, And that is why in Indian accounting standard, we have said that in case of common control transaction, in case of common control acquisition, we will go by pooling of interest method. And this is known as a carve-in. Why? Because this guidance was not there in IFRS, and we have put in an additional guidance in Indian accounting standard in Ind AS 103. Is that clear to everyone? Friends, is that clear to everyone? I hope it is clear to everyone. Thanks, Ravinder. Thanks for the feedback. Namrata. Namrata is saying father and grandfather is nice trick to remember, sir. Thank you. Whether my voice is clear to everyone? ICI team, whether my voice is clear, please confirm on the chat box. Because one student is only saying that my voice is not clear. My voice is breaking. ICI team, please confirm on the chat box. Okay. Yes. My voice is clear and the internet connection is excellent from my side. Probably there may be a problem from your side. Please check your internet connection. So Ravinder is asking, sir, pooling of interest means book value method. Book value means when you are acquiring another company, so take the assets and liabilities, take the net assets on the book value, like you were doing in AS 14, accounting for amalgamation, right? Okay, very good. Yeah. Now the third kind of thing, we have discussed two things. One is carve out. The second one is carve in. Carve out means doing a different treatment. You remember this long-term loan. The second one is carve in means putting additional guidance. Now the third thing which we are discussing is removal of option. What is meant by removal of option? Removal of option means removing the option. Means we were having two choices in IFRS standard, and out of two choices we have eliminated one choice. So we have two options and we have removed one option, and which is known as a removal of option. So we have only two or three removal of options in the Ind AS standards, right? So we have eight or nine carve out, one carve in, or two or three removal of options. That's the only change, right, guys? So removal of options. Again, in Ind AS 1, let's discuss the removal of option. What is meant by removal of options? Removal of option means removing choices given in IFRS. Removing choices given in IFRS, right? In IFRS, there is a standard IS1, presentation of financial statement. In Ind AS, the standard is Ind AS 1, which also talks about presentation of financial statement. It says that in profit and loss account, in IFRS, the expense can be classified by function or by nature method. What is meant by function or what is meant by nature method, I'll discuss. But in Ind AS, in IFRS, there were two choices, either by function method or by the nature method. You have to classify your expense either by function method or by nature method. But in Ind AS, the expense has to be classified by nature method only, right? The expense has to be classified by nature method only. So we have removed this function. We have removed the functional classification of expense. Sir, what is meant by function and what is by nature? So we are talking about in the profit and loss account, what should be the classification of expenses? Is it by function or is it by nature? Right. Friends, coming to the functional or nature-based classification, let me explain you first of all. What is a functional classification? What is a nature-based classification? For example, the company is having a factory building and the company is having an office building, right? So there is a depreciation on office building as well as there is a depreciation on factory building. For example, on the office building, the depreciation is 100 lakhs. And on the factory building, the depreciation is 200 lakhs, right? Going by the nature method, nature-based classification of expenses doesn't matter. It is a depreciation on factory building or depreciation on office building or depreciation on vehicle. What is the nature of the expenses? The nature of the expenses is depreciation expenses. So entire 300 lakhs has to be shown as a depreciation expenses in the P&L. But in functional based classification of expenses, it is like a MIS based. It is like a activity based. So 100 lakhs has to be shown as a office overheads and 200 lakhs has to be shown as a factory overheads. Likewise, for example, there was a expenses related to there was a salary related to finance and accounts department. There is a salary related to IT department. There is a salary related to sales and marketing department. So going by the functional classification, the salary has to be bifurcated into sales and marketing expenses, finance and accounts expenses, IT expenses, right? But according to the nature-based classification, it doesn't matter the salary relates to which department. It has to be shown as one line item, which is like a salary expenses or employee benefit expenses. So friends, in India, we were already following the nature-based classification of expenses in Schedule 3, right? And that is why we have removed the option of function-based classification in the Ind AS standard. Is that clear? In IFRS, globally, there were two options of classifying the expenses in the P&L. One is function-based classification, one is nature-based classification, right? And this is what we have removed. Is that clear? Out of two options, out of two choices, we have removed one choice. Is that clear? Is that clear, friends? Yeah. Namrata is asking, sir, what is the difference between reporting and accounting? So, Namrata, accounting means recording the transaction in the books of accounts. Reporting means reporting includes accounting. Reporting means reporting those transactions completely. For example, when you are putting a salary expense to bank, it is a accounting. But when you are reporting this salary in the profit and loss account, all the disclosure relating to salary, like actuarial valuation, actuarial disclosure, this is known as a reporting. Reporting means disclosing. Reporting means reporting or disclosing the transaction in a manner where the users will be able to understand the implication of those transactions, right? Is that clear? Okay, so friends, let's move on. So what in India we have done? India has converged to IFRS. And what is the difference between IFRS and Ind AS? Carve out, carve in, and removal of option. This removal of option is also known as curtailment of options, right? So we have converged IFRS. Ind AS are the Indianized version of IFRS applicable to India, right? So where have we moved? I would say, where have we moved? So we have moved from AS to Ind AS. Why? Because Ind AS is more global approach in comparison to Indian approach, right? So friends, if you read Ind AS, you are already having a knowledge of IFRS as well, right? So it's like on the same ticket, right? On the same cost, you are going to Goa as well as you are going to Maldives. Is that clear? If you are reading Ind AS, your IFRS preparation has also been started. Fair value versus historical. Around 30% standard talks about fair value approach in comparison to historical cost approach in accounting standard. Reporting versus accounting. If I talk about Ind AS, if I talk about IFRS, you know, for example, for a company, if the balance sheet size, if the financial statement size is 30 pages in accounting standard, it will become 50 pages in IFRS or Ind AS. Why? In Ind AS, it becomes 50 pages. Why? Because there are a lot of disclosures in Ind AS. And if I compare the quantum of Ind AS standards in comparison to AS standards, there are in AS, there are AS 1 to AS 29. There are 27 standards. Why? Because AS 7, sorry, AS 6 and AS 8 is not there. There are 27 accounting standards. But in Ind AS, there are 39 Indian accounting standards, 39 Ind AS. Right? Is that clear? In Ind AS, there are a lot of disclosures. Substance over form. Indian accounting standard are substance related standard, right? If I talk about consolidation, if I talk about financial instruments, if I talk about revenue recognition, if I talk about leases, you will find all the standard are substance over form related standards. For example, what is the classification of preference share capital? In India, we can issue only redeemable preference share capital. Irredeemable is not allowed. So friends, what is the classification of preference share capital in India? You are showing in share capital, right? You are showing in share capital in accounting standard. So far in till CA Inter, you have read that preference share capital is share capital, right? But friends, going by the substance over form concept, preference share capital is not a residual interest like equity. It's not a share capital, it's a liability, right? Preference share capital has to be paid before equity. They are like a creditor. So in Ind AS, this preference share capital has not been shown as a equity share capital. It has to be shown as a liability. So Ind AS standards are substance related standard. You will read, you will find that consolidation, it's a substance over form related standard. Revenue recognition, leases, financial instrument, these all are substance over form related standard. Is that clear? Is that clear? Yeah. You're right, Namrata. It is a liability as per financial instrument standard. You're right, Uma. It's a financial liability. Okay. Principle based versus rule based. In Ind AS standard, there is no rule. For example, in our accounting standard 21, it says that when a company is having more than half of the voting power in another company, it will become a subsidiary. But in Ind AS, there is no concept of more than half of the voting power. The concept is the determination of control. You will read this in Ind AS 110. So Ind AS standards are more principle based rather than rule based standard, right? So why we are moving to the Indianized version of IFRS in India? Why? Because this IFRS has been used in more than 160 countries across the globe by way of adoption and convergence. One language will of course enhance comparability, understanding, and one set of books. Right? For example, Michael, who knows IFRS, he's sitting in London. And when he was reading the Reliance Industries annual report, which is into Ind AS, if he will replace the word Ind AS with IAS or IFRS, probably he will be able to understand the Indian financial statements. Why? Because the concept is same. The concept is same, right? Is that clear? Is that clear, friends? Friend, just give me a second. Someone is on the door. Just give me 1 minute. Right? So if you have your financial statement ready, you can easily go to IPO. You can easily go for the foreign investments, right? You can start searching your PE investor. So easy access to global capital market, which attract foreign investment and low cost of capital. These financial statements are more transparent and visible. Why? Because there is a lot of requirement of disclosures are there. For example, in accounting standard, we are only disclosing accounting policy, right? And these accounting policy are based on some judgment and estimates also. For example, for impairment, you are determining what is your cash generating unit, CGU, and finalizing the CGU is depending on some estimates, right? So what are the estimates we have taken? These kind of judgment and estimate is also required to be disclosed in addition to the accounting policy. So these standards are more transparent and more visible, right? Is that clear? Friends, now let's discuss how we have drafted Ind AS. Very, very, very important part. How we have drafted Ind AS. Yes, Bhautik, I will also share my PowerPoint presentation, and I will also share this Excel file, right? Is that clear? Friends, we have done a very beautiful job here, I would say. As a ICAI, we have done a very beautiful job. What we have done, let me explain you. Friends, wherever the old international accounting standards were there, what are the old IAS, which is issued by IASC and revised by IASB? So in the number, it is IAS 1 to IAS 41. IAS 1 to IAS 41, as far as number is concerned. IAS 1 to IAS 41. But from IAS 1 to IAS 41, all the standards are not live. In between, lot of standards have been deleted. Where they have gone? They have gone to IFRS standard. As I have told you, out of 41 IAS, only 24 IAS are live. Only 24 IAS are live, right? So friends, wherever IAS was there, like IAS 1, right? IAS 2, IAS 3, for example, we have issued Ind AS standard, Ind AS 1, Ind AS 2, Ind AS 3, right? So we have issued Ind AS 1 to Ind AS 41. Wherever IFRS standard were there, in IFRS, it was IFRS 1, but we cannot start with again with Ind AS 1. Why? Because globally there were two nomenclature, IFRS and IAS. But in India, there is a single nomenclature, Ind AS. So for IFRS standard, we have started 100 plus 1. Ind AS 100 plus 1. For example, for IFRS 1, we have started with Ind AS 100 plus 1. For IFRS 2, we have started with Ind AS 100 plus 2, right? For IAS standard, we have started with 1. For IFRS standard, we have started with 100 plus 1, right? We have taken the same name, everything same, and we have also maintained the same sequence, right? Is that clear? Is that clear? For interpretations, IFRIC interpretation and SIC interpretation, we have done a very excellent job here. In global scenario, the interpretations are separate. For example, if you have to search what is the clarification in intangible assets, there are 3 clarifications. You have to search, right? Where is the SIC interpretation? Where is the IFRIC interpretation? But in India, what we have done, after the standard, at the end of every standard, whatever clarifications are there globally, we have incorporated those clarification in the form of appendix. In the form of appendix, we have incorporated those clarifications in the form of appendix. Is that clear? So you are not required to go and search everywhere. Just you need to open intangible asset standard. After the completion of intangible asset standard, there is an appendix A, B, C, right? Those appendix has given the clarifications with respect to intangible asset standard. Is that clear? So let me show you the Excel file also, so that you will be clear about the structuring, about the numbering of these IFRS standard. Friends, I hope this Excel file is visible to all of you. Friends, for example, where IAS 1 was there, we have issued Ind AS 1. IAS 2, Ind AS 2. We have not issued IAS 3, 4, 5, 6 counterpart standard. Why? Because IAS 3, 4, 5, 6 is not there. Why? Because it is deleted and moved to IFRS standard. So we have also not notified Ind AS 3, 4, 5, 6. IAS 7 is there, 8 is there, we have notified Ind AS 7, 8. 9 is not there, we have not notified. 10 is there, we have notified. 11 is not there, we have not notified. 12 is there, we have notified. 13, 14, 15 is not there globally. and also we have not notified Ind AS 13, 14, 15, right? Friends, likewise, from IAS 1 to IAS 41, wherever the IAS standard is live, we have issued and notified the counterpart Ind AS standard. That's all. For IFRS standard, from IFRS 1 to IFRS 16, all the standards are live. We have issued Ind AS 100 plus 1 to Ind AS 100 plus 16. So 101 to 116. So these all standards we have issued. Is that clear how we have drafted this numbering? How we have finalized this Ind AS standard? Is that clear? Is that clear? Yeah. Guys, I hope you have understood that how this numbering has been structured. Great. Thank you, Radhika. Thank you for such a nice and wonderful feedback. I'm glad to hear that. Yeah, is that clear? So, friends, if I talk about the total structure, there are 24 IAS. There are 24 IAS, right? Instead of 24 IAS, we have issued 23 Ind AS. That one series, 1 to 41 series. There are 16 IFRS. For 16 IFRS, we have issued 16 Ind AS. So there are 40 standards globally, and we have issued out of 40 standards, we have issued 39 Ind AS, right? 39. Sir, why 39 Ind AS? Friends, there is one standard, IAS 26. We have not issued the counterpart Ind AS of IAS 26. Why? Globally, IFRS is also applicable to trust, but in India, we have finalized the applicability of Ind AS only to the companies, right? Only to the companies. So that is why we have not issued the counterpart Ind AS of IAS 26. Whenever Ind AS will be applicable to trust or non-corporate entity, probably then we will notify this standard, right? Is that clear? As of now, Ind AS is only applicable to the companies. We will discuss the applicability in detail, but as of now, it is only applicable to the companies. Is that clear? Okay, very good. Very good, friends. Thank you, Ravinder. Thanks for your feedback. Is that clear, guys? You have understood the IFRS, Ind AS, IAS. Have you understood? So far, we have talked about Ind AS standards, IFRS standards. So far, we have talked about that what is Ind AS, what is IAS, what is IFRS, and how these Ind AS have been converged with IFRS, right? So we have understood the meaning of adoption, meaning of convergence, and we have understood that what is meant by carve out, what is meant by carve in, what is meant by removal of options, right? Yes, Ind AS is also applicable to Section 8 company as well, right? Clear? If the Section 8 company is following, is crossing a threshold, which we are going to discuss about, on that case, Ind AS is applicable to those companies as well, right? Friends, we have discussed this entire list, and of course, I'll share this after my session, this entire notes after my session, right? Is that clear? Friends, now coming to the Ind AS standard structure. When you read Ind AS, first of all, there is a main standard, right? Main standard will be there. Example, Ind AS 16, which talks about property, plant, and equipment. Okay. Then there will be appendix. And what is appendix? There are two kind of appendix. Appendix, alphabetical appendix means appendix A, B, C, and numerical appendix, appendix 1. So in alphabetical appendix, there is a interpretations. Alphabetical appendix is a counterpart of interpretations, right? The main standard like Ind AS 16 is a counterpart of IAS 16. Appendix are counterpart of quick interpretation or SIC interpretation. In numerical appendix, the difference between IFRS standard and Ind AS standard has been given para-wise, right? So friends, when you read accounting standard, in accounting standard, a lot of places may or should word has been used, which means optional. But when you read Ind AS, more than 75% places, or I would say close to 90% places, the word shall has been used. So when you read Ind AS, you have to read Ind AS very carefully, right? Because in accounting standard, lot of places the word was may, should, means optional. But in Ind AS, the word is shall. Shall means mandatory, right? So it means the compliance is mandatory. Is that clear? It's 8:26 now. Let's have a 10 minutes break and we will start at 8:37. Okay. In between, if you have any question, please write down your question in the board of studies query link. Of course, I'll read those questions and I'll answer to that. Is that clear? After the after the break, we will discuss applicability part. That being a article assistant or being a article, if your firm has two set of companies, two set of client on which AS is applicable and Ind AS is applicable, you need to see on which set of client which standard will be applicable. So it is important to understand the applicability part, right? Okay, friends, before giving a break, let's discuss these things for the next 2 minutes and then we will give a break. So in the PPT, I have given the entire listing of Ind AS standards, IFRS and IGAP standard. And you can see that at a lot of places, IGAP standards are missing, but Ind AS and IFRS standards are there. And I have already told you that these standards were notified via MCA notification dated 16 February 2015. If I talk about AS, there are 27 accounting standard. There are 39 Ind AS and there are 40 IFRS. When I say IFRS, it includes IAS. You can see that these are the new standard which were not there in IGAP, not there in AS, but it is there in Ind AS. For example, agriculture based standard, hyperinflationary related standard, financial instrument. There are three standard: Ind AS 32, 107, and 109. There are three standard on financial instrument, but in IGAP there is no any standard. AS 30, 31, 32 was never notified. It was never made mandatory, right? Is that clear? Is that clear? Yeah. So friends, let's have a break. And after 10 minutes, we'll start the session at 8:38. Thank you. visible? Yeah. And we have two set of standards, as you are aware that one is accounting standard, which are notified as per companies AS rules 2021, right? So friends, earlier it was companies AS rules 2006. Now it is this 2006 has been substituted by 2021, right? So if someone will ask you when, so what is the relevant rules where these accounting standard have been notified? It is not companies AS rules 2006. It is companies AS rules 2021. So I have seen many CA firms or many students are doing a mistake when they are writing that the company has been prepared the financial statement as per accounting standard notified in companies AS rules 2006, right? You have to write companies AS rules 2021. So this is also notified by MCA, and Ind AS are also notified by Ministry of Corporate Affairs. So Ministry of Corporate Affairs have notified Ind AS on 16th February 2015. On 16th February 2015, they have notified 39 Ind AS, and they have also notified the applicability roadmap. Applicability roadmap, right? So these Ind AS have been notified under companies Ind AS rules 2015, right? So companies Ind AS rules 2015. MCA has two notifications relating to applicability. If I talk about MCA relating to applicability, there are two kind of notification. One dated 16 February 2015. The second one is 30th March 2016. This 16 February 2015 notification is applicable to companies except NBFC, right? And this 30th March 2016 notification is applicable to NBFC companies. So these are the notifications which is applicable to these two set of companies, right? Is that clear? Is that clear to everyone? Yeah. Friends, is that clear to everyone? Bhautik, Prashant, Sriram, Divya, Vani, Ravinder. Is that clear to everyone? Okay. Now we are going to discuss the applicability part, right? And in the applicability part, why it is important to understand? Because we have two set of standard. We have new Ind AS, right? And we have old accounting standard. We have old AS and new Ind AS. We have two different set of standard. That is why we want to discuss this applicability part, right? So friends, Ind AS was mandatorily applicable from financial year 16-17. The phase one company, the listed companies of India, the phase one company has first time implemented Ind AS in 16-17. 16-17 was the reporting year. So it was voluntary applicable from 15-16, financial year 15-16, because in February 15, this Ind AS were notified. So any company which wants to implement Ind AS on a voluntary basis, they can implement from 15-16, but the mandatory phase was from 16-17, right? So we were not going into the detail of that what was applicable at that point of time, and we will more discuss what is applicable as of today, right? So it was a phase-wise implementation in India when this Ind AS came, right? So the first phase was applicable from 16-17. The second phase was applicable from 17-18, right? So it was a phase-wise implementation. In the phase one, more than 500 crore net worth company was covered. In phase two, all listed company was covered, and more than 250 crore net worth company was covered, right? So it was a very old story. It's been 8 years when these Ind AS have been notified, right? we have already covered 8 years of journey of Ind AS in India. It's not a new Ind AS, right? So friends, let's discuss this Ind AS applicability with the Excel file so that you will be able to understand very clearly and in detail, right? I hope this Excel file is visible. And I'm talking about the as on date applicability, right? Friends, you can see that table, right? I have written this point, all listed company, unlisted company, all listed company, unlisted company. Why? Because there are two different notifications for applicability. Notification dated 16 February 15 and notification dated 30th March 16, right? And 30th March 16 was for NBFC companies and 16 February 15 is for all companies except NBFC. Now, today, if you are an article of XYZ chartered accountant firm and your principal is asking, you have 10 clients. So Bhautik tell me or Vani tell me on this client, what is applicable? Ind AS is applicable or AS is applicable? How will you identify that, right? Let's discuss. Ind AS is applicable to all listed companies except SME listed companies. What is meant by that? Ind AS is applicable to all listed companies. What is meant by all listed? Means all equity listed, all debt listed. For example, if there is an Indian company and listed in London Stock Exchange, listed in NASDAQ, listed in US stock exchanges, for example, Renew Power. Renew Power is an Indian company, but it is listed in US stock exchange. Sir, whether Ind AS is applicable on Renew Power? Answer is yes. So friends, any company which is listed anywhere in the world, I am only talking about Indian company. Please understand. Sir, whether Ind AS is applicable to Facebook, whether Ind AS is applicable to Amazon, whether Ind AS is applicable to Apple, whether Ind AS is applicable to Google, answer is no. They are not Indian companies. Any Indian company listed anywhere in the world, Ind AS is applicable in India. I'm talking about Indian reporting, right? Is that clear? Sir, only equity listed company or debt listed company also? It is applicable to equity listed company as well as debt listed company, right? Is that clear? Is that clear? Okay. So any company listed anywhere in the world, listed in any stock exchange, Ind AS is applicable in India. It's considered as a listed company, right? Is that clear? Okay. But friends, apart from BSE and NSE, these BSE and NSE have their stock exchanges for small and medium enterprises as well, for small entities as well, right? So, for example, NSE Emerge. NSE Emerge is the SME stock exchange for NSE, right? So, if any company is listed in SME stock exchange, in that case, Ind AS is not mandatory applicable to small and medium enterprises. Sir, why they have given a liberty for that? Why they have given a relaxation for that? Friends, as I told you, there are 39 Ind AS. As I told you, in Ind AS, the complexity, or I would say the coverage, the disclosures are manifold in comparison to accounting standard. Just for the purpose of, just to the sake of giving them comfort, giving them some relaxation. So government has made Ind AS voluntary for them, not mandatory for them. Is that clear? So Ind AS is applicable to all listed company except SME listed company. Sir, if that listed company is an insurance company, HDFC Life Insurance Company Limited, whether Ind AS will be applicable? Friends, on insurance company, apart from Ministry of Corporate Affairs, the regulator is IRDA as well. The principal regulator is Insurance Regulatory Development Authority. So IRDA has postponed implementation of Ind AS on insurance company. Sir, what is the applicability date? The applicability date has not yet decided. So Ind AS is not applicable to insurance companies. Sir, HDFC Bank Limited, apart from RBI, it is also listed in Companies Act, MCA. So HDFC Bank Limited is a listed entity. Sir, whether Ind AS is applicable to HDFC Bank? Answer is no. Ind AS is not applicable to HDFC Bank. right? Why? Because Reserve Bank of India has postponed the applicability of Ind AS to banks sine die, right? Is that clear? Because they are giving banks a sufficient time to make them comfortable, right? To align the requirement of Ind AS with the prudential norms of RBI. Is that clear? Is that clear? So Ind AS is not applicable to insurance companies and banking companies, right? Is that clear? Okay. Okay. We understood that. Ind AS is not applicable to SME listed entities. If they wants to apply voluntarily, they can apply. Ind AS is not applicable to bank and insurance companies, right? Just give me a second. My digital pen is having some problem. Yes. It is not applicable to SME company as well. Okay, sir, we understood. Sir, whether Ind AS is applicable to all company like Section 8 company, like electricity company, water generation company, government company, IOCL, Indian Oil Corporation Limited, National Aluminium Company Limited, Steel Authority of India Limited. Yes, Ind AS is applicable to all listed company. Whether it is Section 8 company, electricity company, power company, water generation company, government company, private company, Reliance company, Adani company, whatever it is. If it is a listed company, Ind AS is applicable in India. That's all. Is that clear to every one of you? Each one of you? Yes. Sir, what about unlisted company? What about unlisted company? For unlisted company, the criteria is net worth based criteria. What is a net worth based criteria? On unlisted company, Ind AS is applicable where net worth is greater than and equal to 250 crores. Friend, just give me a minute. For unlisted company, if the net worth of unlisted company is equal to or more than 250 crores, then Ind AS will be applicable to those unlisted company as well, right? So listed company we have covered, unlisted company we have covered, right? Unlisted company we have also covered. For listed company, the net worth is not the criteria. What is the criteria? Listing is the criteria. For unlisted company, what is the criteria? Net worth is the criteria, right? And what is the net worth criteria? 250 crores or more. Sir, what is meant by net worth? We will discuss. Have you understood the applicability part? We are only talking about companies, listed company, unlisted company. Sir, for example, Reliance. Reliance is a big company, Reliance Industries Limited. And when we read the annual report of Reliance Industries Limited, there is a 17-18 pages of related party disclosures. Lot of entities are subsidiary, joint venture, associate of Reliance. Sir, if Ind AS is applicable on one company, whether it will be applicable to the entire group or it will only be applicable to the listed company and unlisted company where net worth is more than 250 crore. So this question has also answered by MCA notification dated 16 February 2015, and this says that if Ind AS is applicable to one company, for example, this is a Reliance, for example, this is RIL, this is Reliance. Ind AS is applicable to Reliance, RIL. It will be applicable to the holding of Reliance, means parent. It will be applicable to the holding of Reliance, and it will be applicable to subsidiary, associate, and JV of Reliance as well. It will be applicable to holding of Reliance as well as subsidiary and JV of Reliance, right? Is that clear? Means if Ind AS is applicable to one company, it will be applicable to its parent, it will be applicable to its joint venture, subsidiary, and associate. Means it will be applicable to entire group. But what is the definition of group? Definition of group means holding company on the upside, subsidiary, associate, and joint venture on the downside. Is that clear? Yeah. Same way, Ind AS is going by 30th March 2016 notification. Ind AS is applicable to all listed NBFC companies and unlisted NBFC companies whose net worth is greater than or equal to 250 crores. If Ind AS is applicable on one company, it will be applicable to its holding company, its subsidiary, joint venture, and associates. Is that clear to all of you? What is holding? Subsidiary, associate, and JV. Subsidiary, associate, and JV is downstream. Holding is upstream. Okay, it's more like a father and the son or nephew, right? Is that clear? Is that clear? Is that clear, guys? Okay. I can see a lot of questions on the query box. I'll answer to that. Just wait for some time. Okay. Friends, now tell me, for example, there is a company which is a subsidiary. Okay, there is a company and the company is a subsidiary, and on the subsidiary Ind AS is applicable. So tell me, if Ind AS is applicable to the subsidiary, whether it is applicable to the holding or parent also, whether it is applicable to the holding or parent also, whether it is applicable to the holding or parent also, yes or no? If Ind AS is applicable to a subsidiary, whether it is applicable to the holding or parent as well, yes or no? If Ind AS is applicable to one company, it will be applicable to its parent also, its holding company also, right? Right? Yes, it will be applicable to its parent as well, right? Its parent as well. Just a minute. Yes. If Ind AS is applicable to JV, so Ind AS is applicable to a company, let's say A Limited, it's a JV. So whether it is applicable to its venturer, on the upside, venturer will be there. Whether it will be applicable to the venturer. You understand, na? If someone says that I am a son, so who is the other party? The other party is the father. If someone say I am a nephew, who is the other party? The other party is the uncle, right? Is that clear? Is that clear? It's little tricky. Yes, Ravinder has made a point here. He said that sir, holding is mentioned. Holding is mentioned. And Pavani and Mansa is saying no. Very good, guys. Because on the upside, the word uses holding here, not venture and not investor. So if Ind AS is applicable to joint venture, it is not automatically applicable to the venturer. Ind AS is applicable to associate. There is a company who is an associate. So whether Ind AS will be applicable to the investor? Answer is no. Because on the upside, only word holding is there. Only word holding is there on the upside. And on the downside, subsidiary, associate, joint venture, all are there. Now, let's take a vice versa case. Upstream. On the upstream, holding and parent is there. On holding company, Ind AS is applicable. Whether it is applicable to the subsidiary? Of course, yes. Because holding subsidiary, Ind AS will be applicable. Ind AS is applicable to a venturer, whether it will be applicable to its joint venture. So it is a venturer. And on the venturer, Ind AS is applicable, whether it is applicable to the joint venture, whether it is applicable to the downstream, whether it is applicable to the joint venture. You're right, Ravinder. You're right, Namrata. Ind AS is not applicable to the venturer and investor. Why? Just because it is applicable on the venture and investor. Yes, it is applicable. Why? Why it is applicable? Because on the downside, the word joint venture is there. On the downside, the word joint venture is there, right? On the downside, the word subsidiary, associate, and joint ventures all are covered on the downside. right? If Ind AS is applicable to investor, whether it is applicable to its associate, yes, it is applicable to the associate. So friends, if Ind AS is applicable to any entity, it is applicable to the subsidiary, associate and joint venture. But as far as upside is concerned, if Ind AS is applicable to this entity, it is only applicable to the parent. It is only applicable to the parent. It is only applicable to the holding, right? Is that clear? Is that clear? Gajanan is asking how to identify a holding company or venture. So Gajanan, just answer one question. If someone is saying, I am the son of him, then who will be he? Father. If someone is asking, saying, I am the nephew of him, then who will be he? He is the uncle. Is that clear? He is the uncle. Friends, if I talk about this thing, how to identify whether it is a holding company, joint venturer, or if it is a investor. So friends, you need to look at the consolidation related threshold. If you are having a control on other entity, the other entity will become a subsidiary and the former will become a parent. If there is an agreement, joint venture agreement with that party will become your joint venture and you will become the venturer. If you have invested 20% or more than 20% interest in the other party and you have a significant influence, in that case, the other party will become associate and you will become investor, right? So Janvi, you will get your answer. Don't worry about that. Is that clear, guys? Guys, is that clear? Holding, subsidiary, joint venture, associate, this concept is clear to everyone? Listed company, unlisted company, this concept is clear to everyone, right? Any company which is listed on the recognized stock exchanges, Ind AS will be applicable in India, right? Is that clear? I hope it is clear to all of you. Very good. Very good. I know few questions are yet to be answered. Net worth, foreign subsidiary. So those questions will automatically answered. Okay. Don't worry about that. What is where Ind AS is not applicable? Ind AS is not applicable to non-corporate entities at all. Right? For example, partnership firm, proprietorship firm, Hindu undivided family, trust, body of individual, association of persons, limited liability partnership. On these entities, Ind AS is not applicable. Is that clear? Sir, can we voluntarily apply? Answer is no. Ind AS is only applicable to companies which are incorporated as per the Companies Act 1956 or as per Companies Act 2013. That's all, right? So we have discussed the exclusion. Ind AS is applicable to all listed companies. Ind AS is applicable to all unlisted companies whose net worth is more than 250 crores. If Ind AS is applicable on any company, it will be applicable to the holding, in downside, subsidiary, joint venture and associate. Ind AS is not applicable to bank and insurance companies. Ind AS will not be applicable to SME listed company. Ind AS will not be applicable to non-corporate company. Ind AS will not be applicable to company whose net worth is less than 250 crores. Ind AS is not applicable to foreign entities. Sir, Reliance is an Indian company. Ind AS is applicable on Reliance and they have a subsidiary in USA. They have a subsidiary in Brazil. They have a subsidiary in London. Sir, those subsidiary, whether Ind AS will be applicable to those foreign subsidiary? Answer is no. Those foreign subsidiaries has to submit their financial statement as per their local GAAP. But sir, in that case, how the Reliance will do the consolidation? So guys, why you are asking in case of Ind AS? Please tell me, when Reliance was preparing their financial statement in the accounting standard scenario, when Reliance was preparing their financial statement in AS till 15-16, till financial year 15-16, Reliance was preparing their financial statement as per accounting standard. And that time also they have a lot of foreign subsidiary. So what their foreign subsidiary were doing? That foreign subsidiary were preparing their financial statement as per the local GAAP. Let's say USA, Europe, Brazil, whatever. But for Indian purpose, for Indian consolidation purposes, their financial statement needs to be migrated to accounting standard. Likewise, today if Reliance is preparing its financial statement as per Ind AS, so Reliance will prepare standalone as well as consolidated accounts. So for the consolidation of Reliance, these foreign subsidiaries financial statement needs to be migrated to Ind AS. Otherwise, consolidation will not happen. Earlier, those financial statements were migrated to AS. Now it is required to be migrated to Ind AS. Have you understood? One of the participants was asking this question, one of the student. Is that clear? Janvi, is that clear? Janvi is asked, sir, if an Indian company has a foreign subsidiary, then whether Ind AS is also applicable on such foreign company. So as far as foreign company local regulation is concerned, local filing is concerned, the local gap is applicable, Ind AS is not applicable. As far as Indian consolidation is concerned, they have to migrate their financial statement as per Ind AS to facilitate the consolidation of Indian company. Right? Okay. Understood, sir. Okay, sir. Clear. Last point I'm not discussing right now. I'll discuss after some point of time. Right. Sir, NBFC company is having a net worth less than 250 crores. Sir, if a normal company is having a net worth less than 250 crore, can it apply voluntarily? Answer is yes. Except insurance, except bank, except non-corporate entity, any company wants to apply Ind AS voluntarily, it can apply, right? But NBFC company cannot apply voluntarily even. It cannot apply voluntarily. So according to MCA notification 30th March 2016, they have restricted NBFC to not to apply even voluntarily. Right? Now, before discussing this case study in detail, let me take the queries of some participants. So, Mansha is asking, sir, then how insurance companies and banking companies data can be comparable in global era? So Mansha, as of now, the Indian insurance and banking companies data or financial statement is not comparable in the global era. Why? Because due to some reservation or due to some issues, when this Ind AS were notified that time, the implementation of Ind AS was decided for bank and insurance company as well, right? But due to some different mechanism in the provisioning norms or in the recognition or reporting purposes in Ind AS vis-a-vis in RBI regulation purposes, there is a conflict or there is a difference between these two, right? And that is why the government wants to, or Reserve Bank of India wants to have some time, right? So that they will align the Indian regulations with the accounting and reporting requirement, and so that the banks will also have some time to align with the new standards, right? And that is why they have deferred this. But don't worry, within a year or 2 years, we are expecting that this Ind AS will be applicable to the bank and insurance as well. Are these insurance banking companies required to comply additional compliance instead of IFRS? Mansa, very good question you have asked. These banking companies are submitting the pro forma Ind AS financial statement to RBI, right? On a half yearly basis. It is not for a public purposes, but only for the consumption of RBI. So they are just making these banks ready. And as you have rightly said, this Ind AS, since we were already following accounting standard and we are one of the largest country in the world, right? And in terms of GDP, we are the 5th largest country in the world, right? So we have not implemented Ind AS on a one go basis. We have implemented Ind AS on a phase wise, in a phase wise manner, right? In a phased manner. So friends, that is why we have implemented Ind AS in a phased manner. That is why slowly and gradually we are covering the entire, entities of India, entire Indian entities slowly and gradually, so that the Indian reporting system will also not be hampered. Bhautik is asking, sir, what if Ind AS is applicable to subsidiary company and not to holding and vice and vis-a-vis? What would be applicable for both? Very good question, Bhautik, and your question will be answered when I'm discussing this case study in the next couple of seconds. Ravinder is asking, sir, is Section 8 company is listed, net worth is suppose 1 crore. Is Ind AS applicable, Bhautik? Ravinder, if Section 8 company is listed in the stock exchanges, in that case, Ind AS will be applicable, because for the listed entities, you are not required to look at the net worth. Listed means in which exchanges should it be listed on to be eligible for applicability of Ind AS? It should be listed on the recognized stock exchanges only, right? I have covered all the queries of the participants. I have seen a lot of enthusiasm and a lot of participation from the participants. So glad to have a students like you guys. Yes, Namrata, companies whose net worth is less than 250 crores can apply Ind AS on a voluntary basis, right? Okay, let's discuss this study and all the queries will be clear, all of you. And for example, Reliance Industries Limited is a big listed company, right? Whether Ind AS is applicable to Reliance, of course, yes, Ind AS is applicable. Reliance CFS Ind AS is also applicable, right? CFS means Consolidated Financial Statement. Friends, RIL India Private Limited is a parent of Reliance Industries. This RIL India Private Limited entity. Let's say net worth is also less than 250 crores, but it is a parent of Reliance. Whether Ind AS is applicable to this parent, irrespective of the net worth, yes. Irrespective of the net worth, yes, Ind AS is applicable to the parent. Why? Because it's a parent of Reliance. A company, if Ind AS is applicable to a company, let's say Reliance, then it is applicable to its holding company as well, its parent as well, right? Is that clear? Is that clear? RIL World Private Limited. There is a company, RIL World Private Limited. RIL World Private Limited is an investor of RIL. Means Reliance Industries is an associate of RIL World Private Limited. Tell me whether Ind AS will be applicable to RIL World. Tell me, guys, whether Ind AS will be applicable or not applicable. RIL World Private Limited is an investor. RIL World has invested 20% equity interest in RIL. So Reliance Industries is an associate. Very good, Kamaljeet. Very good, Vani. Yes, it is not applicable. Why? Because it is not a parent. It is not a parent. Is that clear? Okay. In that case, if RIL World decided to prepare Ind AS voluntarily, they can prepare voluntarily. Otherwise, they have to prepare their financial statement as per IGAP, as per accounting standard. Sir, in that case, how the consolidation will happen for RIL World? In that case, Reliance has to prepare its accounting standard accounts as well, IGAP accounts as well, to facilitate the consolidation of RIL World. Right? But normally what happened? Normally, if the company which is kind of such a stature, like Reliance Industries Limited, their investors are also big companies, right? Or even though their investors are not so big, they have to implement Ind AS voluntarily, right? Is that clear? I'm talking more practically. I'm not talking bookish. But going by the bookish, yes, Ind AS is not applicable to RIL World Private Limited. And if they want to implement, they can implement. Yes, Ravinder is saying only holding is mentioned. RIL Bank Limited, it is a subsidiary of RIL. The bank is a subsidiary of Reliance Industries. And if Ind AS is applicable to a company, it is applicable to subsidiary, associate, and joint venture. Tell me whether Ind AS will be applicable to this bank or not. Tell me whether Ind AS will be applicable to this bank. Ind AS will not be applicable to this bank. Why? Because on bank, even Ind AS is not applicable voluntarily. Even Ind AS is not applicable voluntarily. Then what this bank will do? The bank will file its statutory accounts as per accounting standard, as per IGAP. But for the consolidation purposes, the bank will prepare Ind AS accounts. The bank will prepare Ind AS financial statement for RIL CFS only. The bank will prepare Ind AS financial statement only for RIL CFS. Let me show you practical aspect of this. Let me show you the practical example here. HDFC example. HDFC Limited is a NBFC company. HDFC Limited is a NBFC. Right? HDFC Bank Limited is an associate of HDFC Limited. HDFC Bank is an associate of HDFC Limited. Right? HDFC Limited is a different entity. HDFC Bank Limited is a different entity. HDFC Limited is a NBFC. HDFC Bank Limited is a banking company. Is that clear? So bank is an associate of NBFC. On NBFC, Ind AS is applicable. On NBFC, Ind AS is applicable, right? Ind AS is applicable on NBFC. On bank, Ind AS not applicable. HDFC Limited is an investor. This bank is an associate. And on this bank, Ind AS is not applicable, right? On investor, Ind AS is applicable. The rule says if Ind AS is applicable to a company like investor, it is applicable to the subsidiary, joint venture, and associate. So the rule says the Ind AS will be applicable to the bank, but another rule says that the banks are not allowed even voluntary. So of course, this bank, HDFC Bank, is preparing its accounts as per accounting standard, old accounting standard. But so for the standalone purpose, the statutory purpose, NBFC, HDFC Limited will prepare its standalone accounts as per Ind AS. Bank will prepare its standalone account as per AS. But the HDFC Limited is also required to prepare its consolidated accounts, which is of course as per Ind AS. So for CFS purpose, HDFC Bank will prepare Ind AS account. And let me show you what disclosure they have given in their annual report. This is the annual report extract from the annual report of HDFC Limited for the financial year 2021. What they have written, just read that. HDFC Bank, for the purpose of its statutory compliances, prepare and present its financial statement as per IGAP. As per IGAP means accounting standard, right? These financial statements are largely referred to Indian GAAP financial statement of the bank. The Ministry of Corporate Affairs India, in its press release dated January 18, 2016, had issued a roadmap for implementation of IFRS converged Ind AS, but the timeline for the said implementation has since been deferred. Right? So in the first paragraph, they have written that HDFC Bank has prepared its financial statement as per Indian GAAP, which is accounting standard, right? For the reporting purposes. Ministry of Corporate Affairs has issued the roadmap for implementation of Ind AS, but it has been deferred by Reserve Bank of India, right? Now, second paragraph. HDFC Bank, being an associate of HDFC Limited, has prepared this consolidated financial information, fit for consolidation information means accounts, in accordance with the Ind AS for the purpose of preparing the consolidated financial statement or result of the corporation means HDFC Limited. So this is written in the HDFC Limited annual report, basis of preparation para. They are writing that the bank has prepared its financial statement as per IGAP. But since bank is an associate of us, and that is why for our purposes, bank has prepared fit for consolidation Ind AS accounts for the purpose of our consolidation. Is that clear? Is that clear? Now you have understood how the subsidiary company, joint venture company, associate company on which Ind AS is not applicable, how they are doing this. So we have talked about the foreign company. We have talked about the bank and insurance company as well. Is that clear or not clear? Is that clear? I have shown you the practical example as well. HDFC Limited annual report. This is a live example, real life example. Okay, understood this. Now let's discuss the next one. RIL Insurance Limited, insurance company, and it is an associate of Reliance Industries Limited. Whether Ind AS will be applicable to this entity? Answer is no. Why? Because it is an insurance entity. Ind AS is not applicable because it's an insurance company. But yes, the company will prepare Ind AS accounts for RIL CFS, right? For consolidation account. RIL India SME Limited. It is listed on SME Stock Exchange and it is a subsidiary of Reliance. Whether Ind AS is applicable? Not mandatorily applicable. Voluntary, if they want, they can do. Why not applicable? Because it is a SME entity. So Ind AS is not applicable. Why? Because it is SME. But the company will prepare Ind AS accounts for the RIL CFS. Normally, practically what happened in such a group, except the companies where Ind AS is not applied mandatorily, even not voluntarily, like bank and insurance, all the other entities are voluntary adopting Ind AS, right? For example, non-corporate entities, bank and insurance, these three entities are not allowed even voluntarily. Except these three entities, all entities are normally applied voluntarily, so that entire group will have a one set of accounting and reporting system, right? Is that clear? Rakesha is asking, sir, is there a chance to show different number in CFS by HDFC Bank in this case? Even though Ind AS is not applicable, they are applying for reporting. Of course, yes, because when you migrate into Ind AS, the numbers will be different. Of course, yes, right? Because Ind AS accounting is different from accounting standard accounting, right? When you read Ind AS standards, you will find that the accounting recognition measurement at some places are different in comparison to AS, right? Next, RIL Info Private Limited. This is a private limited company. The net worth is less than 250 crore. It is a subsidiary of RIL. Tell me whether Ind AS is applicable or not. Tell me whether Ind AS is applicable or not applicable. RIL Info Private Limited. It's a private limited entity. Not a bank, not an insurance, not a SME. And net worth is less than 250 crore. Unlisted entity. But it is a subsidiary of RIL. Tell me whether Ind AS will be applicable or not applicable. Very good. Uma, Gajanan, Radhika, Rohan, Prashant, everyone is saying yes, applicable. Very good. Yes, it is applicable. Why? Because of subsidiary. It is a subsidiary of a company on which Ind AS is applicable. Of course, if they are applying Ind AS, there is no point of providing fit for consolidation account. Their statutory accounts are as per Ind AS. RIL NBFC Private Limited. RIL NBFC Limited. The net worth is more than 250 crore. If the net worth is more than 250 crore, of course, Ind AS will be applicable by its own criteria itself. Yes. Net worth is greater than 250 crore, Ind AS will be applicable. RIL NBFC Private Limited net worth less than 50 crore. Friends, RIL NBFC Limited net worth is less than 250 crore. Tell me whether Ind AS is applicable or not applicable. Friends, you remember I have told you that I'll take this part later on. Friends, in 30th March 2016 notification, there was an exception which was given to NBFC company. And what was the exception? It says that if NBFC company is a holding, subsidiary, associate, joint venture of a non-NBFC company, for example, in this case, RIL NBFC is a subsidiary of a RIL. So this NBFC is a subsidiary of non-NBFC. So it says that a NBFC is a holding, subsidiary, associate, and joint venture of non-NBFC. In that case, Ind AS will not be applicable to such NBFC only because of the fact that it is applicable to the non-NBFC. Ind AS will not be applicable to such NBFC, right? If Ind AS is applicable as per its own criteria, means अगर उस NBFC पे Ind AS उसके खुद के क्राइटेरिया की वजह से अप्लाई होगा तब तो अप्लाई होगा, अदरवाइज वो NBFC किसी की सब्सिडरी है नॉन NBFC की, उस वजह से उस पे Ind AS अप्लाई नहीं होगा. Friends, if a NBFC is if a NBFC is a subsidiary joint venture associate of a non-NBFC, in that case, Ind AS will not be applicable to such NBFC, right? In this case, since the net worth is less than 250 crore, in this case, Ind AS will not be applicable to such NBFC. Is that clear? So no, it is an NBFC, but the company will pay the Ind AS account for RIL CFS, right? Is that clear? Yeah. Am I audible now? Am I audible? There was some technical glitch. Am I audible? Yeah. Is that clear? RIL XYZ Private Limited. Net worth is less than 250 crore, but it is associate of RIL. It is a normal private limited entity, no banking, no insurance, no SME, no NBFC. So RIL XYZ Private Limited, it is an associate of RIL. Whether Ind AS will be applicable? Yes, Ind AS will be applicable. Why? Because it is an associate of RIL, right? It is an associate of RIL. Is that clear? Yes. Why? Because it is an associate. In this case, the company will prepare. Of course, the company will not prepare because the company is already preparing Ind AS account. RIL ABC Private Limited, net worth 250 crore. It's a joint venture of RIL. Of course, yes, Ind AS will be applicable. Why? Because it's a joint venture. Clear? RIL LLP, Reliance Industries Limited has invested in LLP. Whether Ind AS is applicable to LLP? Answer is no. Why? Because it is a non-corporate entity. Ind AS is not applicable. Right? Ind AS is not applicable. RIL Africa Limited, it's a subsidiary of RIL. It's an overseas entity. Ind AS is not applicable. Why? Because it's an overseas entity. But this entity will prepare Ind AS accounts for the purpose of RIL consolidation. Clear? Is that clear, friends? Friends, you have to just remember the exception. Non-corporate entity, insurance and banking companies, semi-listed companies, and overseas companies, and Ind AS is not applicable to NBFC just because it is applicable to non-NBFC, right? Is that clear? Is that clear to all of you? Yes or no? Very good. Great. Now, sir, what is meant by net worth? What is meant by net worth? Okay, let's move on. First of all, what we have discussed, we will quickly cover here. Insurance and banking companies are, I believe my PPT is visible. Insurance and banking companies are not allowed to apply Ind AS even voluntarily, right? Is that clear? companies that are listed or in the process of listing in SME exchanges are not allowed to apply mandatorily, but these companies can adopt on voluntary basis. SME companies can adopt Ind AS on voluntary basis, right? They are not allowed. They are not allowed mandatorily to adopt Ind AS, but voluntarily they can do. Companies not covered in roadmap as per their net worth or any other criteria exempted from Ind AS. For example, Ind AS is not applicable to non-corporate entities. Ind AS is not applicable to the companies whose net worth is less than 250 crore, right? Clear? Now, how the net worth has to be calculated? Net worth has to be calculated as per section 2, subsection 57 of the Companies Act and calculated on the basis of standalone financial statements, right? If the company is already preparing standalone as well as consolidated financial statement, net worth has to be calculated on the basis of standalone financial statement. Is that clear? So net worth has to be calculated on the basis of standalone financial statement, right? Ind AS will apply to standalone as well as consolidated financial statement both, right? Sir, for example, in financial year 1920, okay, when the company has prepared the financial statement, and net worth has to be checked always on the standalone financial statement and on the basis of year-end audited financial statement. Year-end audited financial statement, right? So on 31st March 20, the company has checked the net worth as per section 2, subsection 57. So the company has found that the net worth is more than 250 crores. So now Ind AS is immediately applicable from financial year 2021, right? So in financial year 2021, what happened on 31st March 21, the company has suffered with a huge losses and the net worth has gone down. The net worth has gone down to less than 200 crores. Sir, now can we go back to accounting standard regime? Answer is no. Ind AS once adopted either voluntarily or mandatorily cannot be revoked in the prospective years. Cannot be revoked in the prospective years. Clear? Indian company, which is a subsidiary, associate, and JV of a foreign company, should prepare its financial statement as per Ind AS if it meets the criteria, sir. For example, I am a company ABC Private Limited, right? I am an unlisted company. I am a company whose net worth is less than 250 crores, but I am a subsidiary of a big foreign company. For example, there is a company in USA, and that company, that US company is so basically that US company is a parent, and it's a $1 billion company, $1 billion net worth company or a listed company. So whether Ind AS is applicable on me, which is ABC Private Limited, answer is no. For Indian company, you have to see the Ind AS applicability on the basis of Indian companies criteria, not on the basis of foreign companies criteria, right? Is that clear? Sir, if a company which is a overseas entity, foreign entity, whether that entity will apply Ind AS, answer is no. That entity will apply the local GAAP, but for the Indian consolidation purposes, that entity will prepare Ind AS accounts. Is that clear? I hope you guys are clear about these facts. Sriram, LLP is a body corporate, but LLP is not like a company, right? So LLP is outside the purview of Ind AS. Rakesha is asking, sir, for line number 34 and 35, it's not applicable because it's private limited less than 250 crores. Rakesha, you have to, in the line number 34 and 35, this entity is associate and joint venture of Reliance Industries Limited. So if a private limited company or a company whose net worth is less than 250 crores is a subsidiary, associate, and joint venture of a company on which Ind AS is applicable, then Ind AS will be applicable to such company on an automatic basis, right? Is that clear? Is that clear, friend? Of net worth, I have told you that the net worth has to be calculated as per section 2, subsection 57. Net worth has to be calculated as per standalone financial statement, right? This part is not relevant as of now because it's a very old part. Net worth has to be calculated on the basis of audited year-end standalone financial statement. What is the meaning of net worth? Paid up share capital plus reserves created out of profit plus security premium minus accumulated losses, deferred expenditure minus miscellaneous expenditure not written off. This is the formula for net worth calculation, right? Now let's discuss some quick case studies on Ind AS applicability. So friends, so far we have discussed the history of IFRS, where we have discussed right now International Accounting Standard Board is the authority which are issuing IFRS standard. Globally, there are 16 IFRS and 24 IAS, and there are 15 IFRIC interpretation and 5 SIC interpretation. In India, we have started Ind AS with Ind AS 1 to Ind AS 41 and Ind AS 101 to Ind AS 116. For IFRS series, we have started with Ind AS 100+1. For IAS series, we have started with Ind AS 1. And we have also notified the standard in the same sequence, right? Wherever the global standard is not there, we have also kept our number blank, okay? And we have notified 39 Ind AS. Ind AS have been notified as per Ministry of Corporate Affairs notification dated 16 February 2015, right? Then we have discussed, we have two set of standards, accounting standard and Ind AS. Ind AS is applicable to all listed companies except banking company, except insurance company, except SME listed entities, right? And so Ind AS is applicable to all listed entities. Ind AS is applicable to all unlisted entities whose net worth is more than 250 crores. If Ind AS is applicable to any company, it will automatically applicable to its holding, its subsidiary, joint venture, and associates, right? If such company is a banking company, insurance company, non-corporate entity, or SME company, then exemption is there, okay? But for the consolidation purposes, these companies are required to prepare Ind AS accounts for the purpose of consolidation purposes, right? Helping into the consolidation, right? If a company which is a foreign company, on foreign company, Ind AS not applicable, but for consolidation, Indian consolidation purposes, they have to prepare the Ind AS accounts, right? If a company who has voluntarily implemented Ind AS, but after 2 years, 3 years, after few years, they want to go back to accounting standard regime, they cannot, right? It's an irrevocable option, right? If a small company, which is a subsidiary, joint venture, associate, or holding of a big foreign companies, then net worth criteria or listing criteria has to be seen only from the Indian purposes, not from the foreign purposes, right? Is that clear? That clear? Okay. So SME entity can apply voluntarily, but bank, insurance, non-corporate entities, and NBFC company cannot apply voluntary adoption of Ind AS, right? Okay. So quickly discuss this 5-6 brain teasers. Then we will conclude the session. And tomorrow we will start with the format of financial statement, and we will cover Ind AS 1 in the tomorrow session and day after tomorrow's session. ABC India Private Limited is having a net worth of rupees 100 crores. It's a private limited company. Net worth is also 100 crore. Means going by its own criteria, Ind AS not applicable. But let's check the group. And it is a subsidiary of ABC USA LLC. It is a subsidiary of foreign company. So we are not required to see the foreign company status for applying Ind AS in India. The foreign company's net worth is 1000 crores. Doesn't matter. Advise the Ind AS applicability on both these companies. ABC India Private Limited and ABC USA LLC. Whether Ind AS is applicable on these companies, answer is no, not applicable. Not applicable. Is that clear? Is that clear? Yes. So Sriram and Rahul, I will answer to your queries after completion of these 5-6 case studies. Okay. Question number 2. ABC India Private Limited is having a net worth of 300 crore, which is more than 250 crore. Ind AS applicable or not applicable? Yes, applicable. It is having a subsidiary in Bangladesh and Vietnam. It is having a foreign subsidiary. These companies are very small companies with a net worth of less than 50 crore. Doesn't matter. Even though if these companies are big companies, doesn't matter. So guys, advise the Ind AS applicability on both these companies. Tell me. ABC India, Bangladesh, Vietnam. Tell me, Ind AS applicable, not applicable? For India, applicable. For Bangladesh and Vietnam, of course, not applicable. But these companies' accounts have to be prepared on Ind AS for consolidation purposes. For India, CFS. Right? Is that clear? Any doubt? Is that clear? ABC India Limited, a listed company in India. So ABC India is a listed company in India. Ind AS applicable? Of course, yes. ABC India, listed company. Ind AS applicable? Yes, Ind AS is applicable. It has a subsidiary XYZ India Limited listed on a SME stock exchange. It has a subsidiary XYZ India, but it is a SME. Tell me whether Ind AS is applicable to this subsidiary. Answer is no. Why? Because it is a SME. So this subsidiary, if wants to voluntarily apply Ind AS, it can, but mandatory it is not applicable, right? So this company XYZ India, if wants to apply accounting standard for statutory purposes, they can do. But of course, for consolidation purposes, they have to prepare fit for consolidation Ind AS accounts, because just to facilitate the ABC India consolidation. And this company also has an associate, which is a banking company. Associate, which is a banking company. So this company has an associate, which is a bank. So on bank, Ind AS, of course, not applicable, right? But yes, both these entities will prepare fit for consolidation accounts, right? So advise the Ind AS applicable on such company. ABC India, Ind AS applicable for standalone as well as console. But for these companies, Ind AS not applicable for their statutory purposes, but for the consolidation purposes, these companies will prepare Ind AS accounts, right? Very good. ABC Limited is having an investment in ABC and Associates LLP. ABC is applying Ind AS while preparing its financial statement. Advise the applicable gap on LLP. On LLP, what is applicable? IGAP is applicable on LLP. Accounting standard is applicable. Right? Is that clear? Is that clear? Right? Is that clear? A Limited, a listed company, is an associate of ABC Private Limited. A Limited, a listed company, is an associate of ABC Private Limited. So A Limited is a listed company. Of course, Ind AS will be applicable. A Limited, listed. Ind AS applicable? Yes. It is an associate of ABC Private Limited. So A Limited is associate, means ABC Private Limited is an investor. It's an investor. And the net worth of the investor is less than 250 crore. Means going by the individual criteria, Ind AS is not applicable on ABC, but Ind AS is applicable on A Limited. So this ABC Private Limited is not a parent. It is an investor. It is not a father. It is an uncle. ABC Private Limited is an investor. It is not a parent. So on ABC Private Limited, Ind AS will not be applicable due to the automatic route, right? If ABC Private Limited would have been the holding company or parent of A Limited, then Ind AS will be applicable to this private limited entity automatically. But in this case, Ind AS will not be applicable, right? So it will not be applicable automatically. Is that clear? Crystal clear. Ravinder is saying crystal clear. Question number 6. ABC India Limited is a listed company in India. So listed company in India, Ind AS applicable, of course. ABC India. Ind AS applicable? Answer is yes, Ind AS applicable. It has a subsidiary which is unlisted NBFC. It has a subsidiary which is unlisted NBFC having a net worth of less than 250 crores. So ABC India Limited is a listed company in India. It has a subsidiary which is unlisted NBFC having a net worth of less than 250 crores. So unlisted NBFC and net worth is also less than 250 crore. So this NBFC, going by its own criteria, Ind AS not applicable. Why? Because it is unlisted. Second, net worth is less than 250 crores, right? But this NBFC is a subsidiary. So there is an exception for NBFCs. If NBFC is a subsidiary of a non-NBFC, then Ind AS will not be applicable automatically until and unless Ind AS is applicable to that NBFC according to its own criteria. So by own criteria, Ind AS not applicable. So in this case, Ind AS will not be applicable. But of course, being a subsidiary, it has to prepare its fit for consolidation Ind AS accounts for the purpose of consolidation of the parent, right? For the purpose of consolidation of the parent. Clear? Is that clear? Is that clear, friends, or it is not clear? Tell me, is that clear or it is not clear? I'll pause for a 20-30 seconds. I'll wait for your queries. If there is any query on Ind AS, IFRS, carve out, carve in, removal of option, applicability, then I will be happy to answer your queries. Everyone is saying perfectly clear. Sri Ram is asking, sir, Rahul is asking, sir, IFRS versus F. Can you please share some input for optional subjects, sir? Friends, first of all, let me tell you, normally or practically there is no difference between Ind AS and IFRS. No difference means I have told you 99.5% cut copy paste. There is hardly 8-9 carve outs, 1 carve in, and 2 or 3 removal of option. This is the only change, right? If you have a interest in accounting and reporting paper, or accounting is something which always excites you, if you are good in reading accounting standards, I will say, and my recommendation is, you can elect GFRS paper. Why? GFRS paper is nothing. It's all about, IFRS. And IFRS is nothing. It's all about Ind AS. For example, whatever you read in Ind AS 1, just you have to remove Ind AS, or you have to replace Ind AS 1 with IAS 1, subject to carve out, carve in, and removal of option. That's all, right? So reading one paper will give you a preparation of another paper as well, right? And the second thing, if you read IFRS, you will be equip yourself for doing a job in foreign companies, right? For working in MNCs. So this will also help you in your future prospects, right? Second, what is the second? Of course, GFRS is a scoring paper, right? Sri Ram has asked, carve out and carve in. Sir, please, I request you to kindly explain once again about carve out and carve in. Sri Ram, we have not adopted IFRS. We have converged IFRS. That is why we are calling it as an Indian accounting standard. And whatever changes we have done, we have classified these changes in 3 categories. One is carve out, carve in, and removal of option. Carve out means to have a different treatment in our Indian accounting standard. For example, and I have just given you one example. There are 8-9 carve out. Okay. For example, what we have done. So in IFRS, if a company has a long-term liability, if a company has a long-term loan, and on the reporting date, due to some default, that long-term loan has been converted into the current loan or current liability. But before approval of the financial statement, that default has been corrected. And now the substance of the liability is long-term only, non-current only. In this case, IFRS says that it is a non-adjusting event which only required disclosure, and you are not required to change your classification of liability. Still, you have to show it as a current liability. But in India, we does not find it correct. We says that in the current year, you are showing it as a current liability, and in the next year, you will show it as a non-current liability. And before approval of the financial statement, the default has already been corrected. So we said that we will not consider this as a non-adjusting event. We will consider this as an adjusting event, right? Friend, in this case, this is known as a carve out, where we have a different treatment in comparison to IFRS. That is one. Coming to the carve-in, and fortunately, we have only one carve-in in the entire Ind AS syllabus. And what is that carve-in? We have inserted some additional guidance in the chapter of merger and acquisition, which is business combinations, right? On the common control transactions. So of course, you will read this common control transaction when you will have a session on Ind AS 103, right? Thank you, Nidhi, for your wonderful feedback. Thanks, Kishore, Rahul. So Vikalp is asking, sir, in Excel case study, RIL LLP, can you explain why Ind AS is applicable to it? Excel case study, I have never told you that on RIL LLP Ind AS is applicable. So let me show you. I have told that no, it is a non-applicability. On the applicability on the standalone financial statement, I have said that no, because it's a non-corporate entity. It's a non-company, right? I never say yes. Is that clear? Ravinder is asking for one question related to study material. Will you teach us from study institute material, or we refer from any supplementary book? So of course, I'll refer institute study material, right? Thank you, Namrata. I hope you guys have liked the example. I hope you guys have understood whatever I have taught you since last 3 hours. Let me know if any question is unanswered, or let me know if any concept you are not able to understand. I hope you have enjoyed the session. I hope you have liked the session and you have understood the session very well. I'll wait for half a minute, then I'll conclude the session. Thank you, Prashant. Thank you, Kamaljeet. Thank you, Ravinder. I'm glad that you guys have liked the session. Yes, Radhika. So, Indian Accounting Standard was notified via MCA notification dated 16 February 2015, right? So on 16 February 2015, Ind AS were notified, as well as roadmap for applicability of Ind AS was decided, right? The 30th March 2016, on 30th March 2016, the roadmap for applicability of Ind AS on NBFC company was decided. Mansa is asking, sir, impact of technology. Of course, if I talk about Ind AS standards, so technology is very important going forward, like blockchain you have talked about. So the way SEBI is talking about related party transaction, right? The SEBI is talking about the scope of related party. Probably this blockchain will be helpful to identify the related parties, right? Identify the subsidiaries, identify the related parties. Yes, I will share this Excel file with ICAI. Thank you, Rakhisha. Thank you for your wonderful feedback. Guys, I have answered all the queries. Thank you very much. Thank you for joining the session. And I can see the enthu from all of you. I can see a lot of queries, a lot of concept discussion. So thank you, guys. Bye-bye. Take care. Stay happy, stay safe.